Hello everyone, this is Oliver from Braveheart Trading. In today's video I'm going to explain this counter bias scalp I took. How I was initially trading with the trend at first, but then once I took a stop out, how I used this Asian inversion fair value gap to reverse whatever idea I had and mitigate that loss with a small profit. So even though I made a high probability decision to stick with the trend here, but if I take a loss from that, it turns into a cost of business, and from that cost of business I can either stay on the sidelines or reverse my idea to mitigate that cost of business. So therefore, like, in the grand scheme of things, from a long-term view, it really helps with those drawdown days. So let's get into it. So firstly, the bias I had was aiming towards this weekly draw, which was this old weekly high here. So when we had unemployment claims, I was expecting that volatility to push us up into the weekly draw here. Okay, so if London forms a low, I'm expecting New York session to continue, especially when we haven't hit any higher time frame level yet. So that was the expectation going into New York session. It was London formed a low, and for New York to continue that low into the weekly draw until a higher time frame level gets hit. So why did I believe that London session had a low here? Well, we were accumulating at this new day opening gap. It was below the midnight opening price, and we did have some SMT there. Okay, so when I saw New York session start trading and we impulsively displaced out of this consolidation, I wanted to see this fair value gap here remain as a breakaway gap. So if these are clean, it is a consolidation, these are clean. If we retested that, I would not really like to put a stop under here. So I would prefer for this to act as a breakaway gap to show that this was strength. And the reason for that was we broke above this Asian inversion fair value gap. So when I pick my Asian inversion fair value gaps, first of all, I like to do it at the extremes of the price range. So this is the price range here. That was the intraday range. Whenever I pick my inversion fair value gap, it is at the extreme of the range, which is here. So we hit this new day opening gap, we consolidated, we had SMT divergence, we impulsively broke away, which broke this and seeked this. And if I'm looking for a New York session continuation, and for this to remain open to show us strength that it wanted to reach this weekly draw, then how am I going to continue that? Well, I was looking at this down candle here, and if we want to draw towards this point, we're going to do so with institutional order flow, which suggests that down candles need to support price, and then up candles have this impulsive legs up, which is low resistance to the upside. So I took that opportunity to frame a trade on this order block, with inversion fair value gap, and also another fair value gap here. So I had three PD arrays I was looking at, and they were all nested. So I had the 15-minute order block, I had the inversion fair value gap here, and I had these subordinate fair value gaps. Now, to participate on that, I drew my low from here to high from there, and I was looking for an optimal trade entry to New York session continuation towards the weekly draw. However, intraday highs, they do set up the potential for reversals. Okay, so even though my bias is bullish, I'm aware of, okay, intraday highs that could reverse. And if it did reverse, this order block I had marked out should not break, otherwise this low is in jeopardy. And if I was to take a long of this, that would be low probability since it reversed here, took out the liquidity. And this, if we came to it, it no longer proved to me that it was strong. And this would likely be the draw and a revisit into the new day opening gap for fair value, which would indicate that this day didn't want to go to the weekly draw. And there was a high chance of that doing that, because if we look at the weekly range, we have filters. So the filters is Thursday, New York session to London close, kill zone. And within that filter, that tends to set the opposing side of the range. So if we had a bullish week, Thursday New York session can set the high of the week. So I kept that filter in mind. So if we did want to show some strength towards that point, it should not have come in and close this level here. Okay. So those were the factors for the New York session continuation. Now, when did it become invalidated? So ICT always says if you have 3 PD arrays break, your ass is next. And that's just what happened here. We had inversion fair value gap nested with an order block, nested with a subordinate 5-minute fair value gap. All of those broke on this displacement move here, which is not some random displacement since it took out Asia highs and it was in that New York kill zone with the Thursday high of the week filter. So when I saw that, I said, okay, we're trading below this inversion fair value gap now. It should have held support. All these PD rays broke and we hit a level that we could reject with that New York kill zone. So now I'm looking for a New York reversal, since we could trade towards this point here and into fair value. So what specific level told me that? Well, it was a close below this mean threshold of the order block. Once we closed below the mean threshold with clean candle close, I got stopped out here. I then saw this as a failed order block, which then I labeled as a mitigation block. So what type of mitigation block is this? Well, we have a low, high, low, low, so that would be a breaker. So this order block which failed, I'm now looking for it to be turned into mitigation to mitigate these longs. I took out this high. So In order to do that, I like to find PD arrays that nest together, which build confluence around together. So after we broke this Asian high, I was looking at this mitigation block, and you can see that mitigation block is paired beautifully with this Asian inversion favela gap, which should have held support. Now it broke down, so now it's potential resistance. So now I have two resistance levels. I have the mitigation block, resistance. I have the Asian inversion favela gap as resistance, and we also have this 15-minute favela gap here. So I have after the New York session continuation profile got invalidated, I now have 3 PD arrays for a New York session reversal. And we have the filter, liquidity, unemployment claims, all to back that up. So if this was a reversal, where could this reverse into? Intraday lows. And into this new day opening gap. So once again, I said, all right, if that is the trade, then how could I participate on this? Well, I have 2 entry periods for New York session, right? I have a trade that's earlier in New York session, which is around 7, and I also have late possible entries. So whenever I take a late possible entry, it's pretty much the silver bullet. Okay, so if I'm looking for a late New York entry, it starts at 9 and all the way into 11. Those are my late entries. So I was looking for the mitigation block, and then I was looking for price to return back into a premium. So whenever I'm drawing out optimal trade entry for my entries are not like a specific range, I like to use the bodies. So you can see the bodies here. Retrace back into 62% fib, which I don't really care about. All I care about is the 50%. If we're trading above that into the nested area, then that's my position. And we can see that it was nested again with another order block. So look at the amount of PD arrays that nest together when selecting a high probability PD array. Okay, and this brings me to the ICT 2022 model, which is simply a high gets rated, price displaces lower, breaking that order block on the 15-minute, which is a change in the state of delivery, also breaking this low and this low, which is confirming that, all right, whatever state of delivery here to the upside is now wanting to change its state of delivery to the downside. So I saw that as a market structure break, or market structure shift actually. So we have the raid, shift, A, B, let's write this out, A, B. Now all we have to do is look for a C. Okay, and that's the retracement leg. Then that's where I took the entry. So when price retraces into C, notice how I don't use this gap and I put my stop above this high. because of the higher time frame it takes precedence, and because all the PD arrays were nested here. So also the news, when the news event's coming, it can use a bigger price range instead of a smaller price range. So instead of like this high to this low, if there's no news, it will probably use that. But if there is a news event, such as this one here, it would want to use like a bigger price range. So I took that opportunity. I used the inversion fair value gap. We're trading below it now, with all these nested PD arrays, and the profile, which is the New York session reversal, and the short-term drawn liquidity for that New York session reversal is London lows. I had a high probability short to go from here and exit below these lows and into this new day opening gap. And that's how I mitigated my long position, which I wanted to see towards the weekly drawn liquidity. So mitigated that loss, which is a high probability decision, since you want to stick with the trend, you want to stick with the draw for the week. But you know, trading is not always 100%, so whenever there's a loss, it's a cost of business to make a decision, which is either sit on the sidelines or mitigate the loss with that cost of business. I chose to mitigate it, and that's why the day ended up in small profit, and those small profits do stack up over time. So that's it for today's video. Hopefully you've learned something new, and I'll catch you guys in the next one. See ya.